What is up, guys? I'm back here again with another one. Today, I'm sharing a short snippet video of a market analysis session with my students. Sit back, relax, and enjoy. Okay, what's up, guys? Welcome to today's Zoom session. Well done for logging in. You know, it's always nice to just stare at these things before we dive into the week, right? So today I just want to go through some of the setups that I sent during the week. We want to see how we could have entered them. For those of you that actually entered, well done. And for those of you that didn't, it's not a train smash. You know how it is. The market will always be there. You know, this is why I don't want anyone to rush anything or be impatient and think like I could have made this much. No, that's not how things work. You can just do better this week. Okay, so let's just start from even a setup that I know is currently in profits right now, and that is Volatility 101S. So I just want to quickly talk about why I got that specific zone, what my top-down analysis was. So this one was pretty simple. You know, everything is supply and demand once again. I think exactly. So I was on the weekly time frame, and I realized on the weekly time frame, there's nothing much to it except that we are in a downtrend, right? This is all a downtrend. Reason being, you can clearly see, besides you know, any technical analysis, we can see that the market is actually moving downwards, right? Like I always say at times, right, before you start complicating anything, just look at what's going on. You know, there's a sea of red candles and then you just get a few green, right? So the market is completely overtaken by sellers. So if you're pretty smart, you actually want to be in sell positions, you understand? And we're just looking at that from a weekly perspective. So already we're starting to gain a bias and we're in a downtrend. So also another thing is that when we have figured out that we're in a downtrend, it's important for us to pinpoint the highs, right? Because remember, especially if I've mentored you, in fact, not even if I've mentored you, even on YouTube, I've been talking about market structure and the Dow theory, right? And I said that in a downtrend, we form lower highs and lower lows, and we want to take our trades at the highs. Okay, so basically, this is what's going on for the weekly. These are the highs, lower high, lower high. So for the weekly time frame, if we want to make money, we would need to chill at these highs, and then we would just take trades. Because now remember, the Dow theory states that the market will continue doing this until most recent high is taken out for a downtrend. So we're not actually expecting a high to be taken out. That's not what we'll be expecting. We'll be expecting that the market might even fake like it's trying to take it out, but it will still continue down. Cool. So that's for the weekly perspective. And then on the daily, I went down as well. And what did I see? For the daily, let's just remove this whole gray zone so that we don't get confused. For the daily, what I saw is that we're also in a downtrend, obviously, for the daily time frame. Let's just clear all of this stuff from the weekly. That was just helping us with the bias, right? So now for the daily, once again, we know that we're in a downtrend. So what do? We want to chill at those highs because we will be taking our trades at the highs. Now, boom. All right, so we have a high, lower high, lower high. Price moved away from this high and went back straight into this high, right? So you want to sell at a premium price at the highs once again. So we would be looking for an entry somewhere at this high, right? So clearly on the daily, this would be your key point of interest to sell. So we go down to the lower time frames. What did I see? So now, if you were looking at this, right? I think I sent this setup on the H1 actually. Why I sent it on the H1 was there was a clear liquidity game that was being played and I could spot that easily, right? So now that game was played right here, okay? Remember what I told you, right? You see this level of resistance here. Let's discuss what happened at this level of resistance. What is possibly, what could have happened here? Why this level of resistance was created for you so that you can make the ultimate mistake as usual. So once again, remember, an amateur would have been zoomed in like this on the H1. And guess what? He would be just trying to sell at resistance, right? So, I mean, look, he did get away with it, I guess, over here or whatever. But I mean, that was not the move. He's trying to sell here. And when he sells here, where do you think his stop loss will be? His stop loss will be right here, okay? So his stop loss got hit. That's number one person, right? And then we also need to understand that when this resistance breaks, it's going to start influencing it will start influencing the specific behavior. That is, people start buying, right? So someone actually bought at the break of resistance, right? And look, he made money, but you see what I always say to you, you see, you make, but not enough for you to be consistent if you don't know what's actually going on, right? So what happens? You buy the break and then fine, you've made profit or whatever. But for me, right? For me, this was my key point of interest. If you please check this out on the on our trade alerts and setups, right? This was my key point of interest. The reason why I placed this key point of interest, first of all, was there was this bearish engulfing candle. That's number one. And two, there's this resistance. So I know that people start buying, but I would be wanting to sell here. Do you understand what I'm saying? Another person here said this resistance is broken, so it turns into support. So he's actually pumped buys. And now remember how evil the derivative crew is, right? Or any markets really. At this break of resistance, right? Remember, if you are reading the evil textbook, you waited here at support to buy, and they gave you exactly what you're meant to get, which is a nice bullish engulfing candle, a signal for you to buy, because this was the liquidity play. They needed you to be right here. So now understand one thing. They're very selfish. The reason why I say that they're very selfish is that, common knowledge is that you are meant to enter after this candle is formed. Do you understand? After this bullish engulfing at this support, this is your buy signal. They're so selfish, they're not even willing to give you even one tick of profit, right? And so right now you're stuck if you're in this trade. But if you're in this trade, to be honest with you, yeah, you should be in profits up to here. Of course, the market could want to be funny or whatever, but look, it's a game of patience and also trying to understand what your goals are. I think if I had been in this trade, I was just busy with festivities yesterday. So, I haven't really been looking at this, but if I was in this trade, I would be considering maybe some hedging positions and stuff like that, or even taking the money, because this is what, 4, 8, 12, this is like what, 16 hours of profits, but you don't need to be greedy. I know I have a student of mine that actually entered this trade and he made a lot, and well done to him. Cool. So that's volatility 101 SY. We got that setup. Let's move on to volatility 50. This one also paid yesterday, and the setup was actually very simple. But I'm going to start once again from the higher time frames and see what I was seeing. Okay, cool. So now I think I was looking at the weekly time frame. I realized that on the weekly, there's nothing special except that there's this uptrend right here. We have a high over here, right? And then we have a higher high. I know some of you are wondering, why is this higher high or whatever? Man, sometimes I've told you this, just switch the line graph so that you see exactly where price closed. And then you start realizing this is an uptrend. So now when you're in an uptrend, you really want to favor buy moves, right? That the top-down analysis from the higher time frames, as usual, guys, it's just going to help us to gain a bias. It's all about bias. Remember, you can only make money in two ways in this game. Either buy or sell. If you buy it, it goes up, you're winning. If you sell it, it goes down, you're winning. So you need to create a bias from the higher time frame. So when I saw this scenario of a high and a higher high, I realized, okay, fine, we are in an uptrend, right? So that's for the weekly. Now let's go to the daily time frame. Daily time frame as well, basically in an uptrend. Sometimes you need to understand how these things work, right? Once again, you can clearly see that most of the candles are just green, right? We're now doing trading for dummies, right? Before you've placed any other bias, just see that each time the market is red, it's literally just continuing up. So because trading is a game of probabilities, in a market like this, essentially in this period, you really want it to be what? Looking for buy positions. Do you understand? Because it's going to be less stressful. Imagine if you're catching sell positions and you just get that. You just, in fact, these are just losses. Okay, cool. But so what do we do when we know that we're in an uptrend? It's important to analyze where the lows are at. This is a low over here, higher low, right? Higher low and so forth. And then we broke market structure. Cool. So this is for the daily time frame. It's important for us to even assess what's actually happening. These are days of market movement. This is also an uptrend of its own in this region here. So let me just delete this, okay? And let's deal with this region here. All right. This region here is actually an uptrend of its own right here. So now let's go to the lower time frames and assess on the H4, all right? This is where I found my setup. Now, so on the H4, I realized, okay, fine. The market is actually in an uptrend once again. And guess what? In an uptrend, remember the lows are not broken. That Dow theory, it's going to help you. Low, higher low, higher low, higher low, higher low. All right, so the market has been going in an uptrend. But however, there's what we call liquidity grabs. And I've told you, especially if I've mentored you, do not make the mistake of being on the higher time frames and you do a trend line like this and you sell this thing. That's not what we do, because if you did that, then you got it right, exactly what they wanted you to do again. But let's not digress. Let's talk about why the setup was placed the way it was. I remember what it was. What I said to you guys was on the H4, that is, mark this low. Okay. And why? Because this is a really pronounced low. You can see, and I said in an uptrend, we're not really easily trying to break lows. That's what we've always known because of the Dow theory. I said they might want to spike below this, just watch out, okay? But for me, what made me very interested in this level, mind you, was the fact that there was these lows right here. All right, you need to understand what this type of scenario induces people to do in the market. Let's go to the H1 and then you nicely see exactly what I'm talking about. So on the H1, first of all, we have this low, right? That's the low where we want to really start looking for buys, right? And what happens is that just above this low, there's this level of support. That's our beautiful amateur, right? We'll obviously be looking at very zoomed in as well. And when support breaks, guess what it's going to do? It's going to sell. And, you know, you'll make money for a little bit if he's actually just smart enough. Because, I mean, there's people who are actually making a living out of trading like this, by the way. I've seen a couple of other guys' YouTube pages, and, you know, you can actually make money if you know when to get out quickly as well. You understand? Because, I mean, if you sell here, and you mustn't then be foolish enough to think that the market is going all the way here. Right, you then quickly get out, but then it's just not right trading. You know, to be honest with you, I'll also be very questionable. I'll be very, I would want to question your profitability, your consistency, right? If you're trading like that. But anyway, support breaks, and that break of support will obviously induce sellers, right? The intention of the market maker in this region is to buy. So he needs to make sure that you sell. Remember, I've explained to you logically, you cannot buy something if there's no one selling. So he needs to make sure you sell. This is you guys, you're busy selling, and he will just then provide the necessary liquidity to go against everyone, then he makes money, right? But the answer, what we want to discuss is what made me enter here. This one was actually a very nice trade. I made quite a decent amount before I went for my festivities, which was, it's a nice feeling, you know, to go out there knowing that, you know, whatever we do today, I traded for this. You understand what I'm saying? But anyways, I've taught you guys, especially from the last Zoom session last week, I gave one entry confirmation for free. Basically, I said, let's look for a channel break at these lows and these highs, or at our key points of interest. And that's exactly how I entered this market. I remember I just then went to the M15 and I was waiting over here and I saw a very beautiful channel coming into that low. Right. So, okay, this is what we have. Right. Very nice. And I explained to you guys, right? When that channel breaks, that is your entry. Right, and then what are you going to do? You're going to take a vertical line to make that your stop loss, or you're even going to pump, depending how crazy you are on that day. Do whatever you got to do, man. Just know that this is free money right here. If you entered this trade, you'd have been swimming, right? I know I've a few students that did. Okay, but anyways, so what did I say as well? Take profit level. I said take it at the 90, or you know what? If you find that there's a level of resistance or support that price you know, respected in the past, take your profits there, because sometimes, to be honest with you, your psychology is not going to be, you know, massaged while you see this type of retracement, even if the market wants to go up. You understand what I'm saying? Even right now, this trade is still in profit, but would you have been okay with seeing that retracement? Hell no. You know what I mean? This is why I got out. In fact, I even got out somewhere here. You know, I had made enough. I had made enough bag. I don't need to wait for all that stuff. But now let's even look at what's happening right now. You know, right now, the market still is respecting this low. Guys, do not be fooled by what will be happening. Go to the line graph. You see, price is failing to break this low. The Dow theory, this is an uptrend here. This prominent low is what's failing to break right now. We're still going up. So had you even waited here, right? Saying to yourself, I want to see how price behaves when it comes back to this low, which is right now. You would then go to the lower time frames and you check. This is a trade that was not caught, but let's see if there was an opportunity for you to be in profit right now. And I can already see that there actually is. What did you just need to do? Grab a channel, all right? Make it look neat. You understand? Don't scam yourself. Or don't fool yourself. Make it look, if there's no channel, there's no channel. Then you sit on your hands. This is why you have all these charts. You don't have to focus on that one only, right? And this is what you did coming into that low. Momentum change. There's the break, and guess what? You enter. This was a nice one because you take your stop loss to the vertical and then you just assess. Right now, you just be in profits, bro. That's just what it is. If you want to take your profit because you're psychologically not ready, I would suggest that here you should take, because to be honest with you, I would expect a little retracement here. The market wants to go up, it will. But my question is, unless you're a swing trader, I have a swing account, and then I have an account that I'll be scalping, where I put in very little money and I scalp and all that stuff. If I'm swinging, then yeah, I'll just put in my stuff and I won't even look at it, right? But if I want to make money, my take profit is here. And I don't want to see myself, because look at this logically, right? Let's say this is even a $300 account. You're in right now, and your account is probably now maybe on 680 or something. And because your stop loss is somewhere around here, your take profit, around here, your account would be probably maybe on $800 or something like that. So do you think you'll be fine with seeing a retracement and you see your account back again at like 360? You know what I mean? This is retarded. Take the money here. All right, so there you have it. As usual, trading does not have to be complicated. I always tell my students that patience and understanding pay the bills. In fact, if we were to look at a few of my students' progress over here, they are doing wonders, okay? So if we are just to scroll back to some of the testimonials I received, this is my student Rosano from the Bahamas, and he sent me some really nice updates. In fact, he started an account with $44, and as you can see over here, he turned that to 441, but he ended up doing even wonders as he held the trade, and that $44 he turned into 1,844 in one trade. So this is not something that is impossible in trading. It's all a game of patience and mastering entries. But you can't get there without adequate practice. Okay, if we were to look at another one of my students who also does really well, always sending some really nice testimonials. If we were to scroll just to find, the amazing work that he has been doing. So in fact, almost on a daily basis, it's always profit, $657 in profits over there. Also over here, we have 236. The story goes on and on. Over here, this is him, holding an equity of $1,000. And look, the testimonials are amazing, your teachings are powerful, bro. You're changing lives. I appreciate you. This is what we wake up to do. But once again, practice makes perfect. Another student of mine called Cavell from Jamaica, doing wonders. I'm just pinpointing these. These are just a few out of the many, because, these guys are really putting in the work, and they are showing, right, that, to be honest with you, trading is not complicated. It's mostly about understanding. So look at this guy getting into the market with a $280 balance, and in one trade, he flipped that to $800. You see, this is something that is not impossible. Once again, it's all about practice. And, the testimonials keep rolling in. Synthetic indices trader feeding us from the market. All right, so we can do this all day. Once again, keep practicing, seek knowledge and wisdom, and your days will be fine, okay? If you like what you see, feel free to contact me for mentorship. The contact details are in my description, and I've recently opened an Instagram page. Go follow that so that you keep up to date, keep up to speed with what we do on a daily basis. Ciao.